Gold commenced the week on a strong, bullish note, ascending to an approximate all-time high of 2,150 in the early hours of the Asian trading day on Monday. The increase in activity can be attributed to escalated geopolitical tensions, particularly the Houthi rebels of Yemen targeting 3 commercial ships in the Red Sea. This occurrence rekindled apprehensions regarding the possible intensification of the Israel-Hamas dispute into a more extensive crisis within the Middle East. Profit-taking ensued after the notable upswing, resulting in a substantial correction in the gold-USD pair, which concluded in negative territory below the 2,000 level. In the weekly gold-USD price, a strong bearish candle came, eliminating all gains from the all-time high level. It is a strong sign of a bullish liquidity sweep, which could result in a continuation of the bearish trend this week. The daily gold-USD price formed a drop-based drop formation with a strong bearish D1 candle below the dynamic 20 EMA. Based on this structure, a downside continuation is potent for the coming days. Investors might expect a bearish continuation towards the 1931 level as long as the price remains below the 2040.11 level. On the other hand, a bearish rejection with a bullish engulf above the 20 EMA could be a long opportunity, targeting the 2080 level.